Hi everyone, it's Paul Brown here from Wealth21. Happy New Year to you all and wishing you all the best for the year ahead. Put together a market update just at the start of February, so we're a month into the year. Importantly, anything in this information is just general information only. Please give us a call if you have any questions relating to your specific circumstances or seek advice from an authorised financial advisor. Firstly, I just want to have a look at the index returns for the to the end of 2023. The last quarter of 2023 was very favourable. You'll see that we had strong returns across all the market sectors really, particularly in the property sector, a big recovery there. And it also meant that returns in the calendar year were also quite good. Even the bond market had recovered quite a bit. So the year of 2023 turned out to be a pretty good year for investors, mainly because the fourth quarter was quite favourable. Just a couple of points to note in the longer term returns, like bonds, they're positive over five years, but barely positive. So the bond market, that really significant correction we had in 2022 certainly affected the returns for bonds. And global shares actually has been the best performing sector over the past 5 years and the past 10 years. It's outperformed Australian shares. So let's just look at, firstly, interest rates. We had an interest rate rise to 4.35%, towards the end of 2023. We had an inflation figure. We'll actually come to that next. The inflation figure that just came out earlier, or this week, down to 4.1%. So the inflation rate probably has fallen a bit more than the central bank was expecting. So in terms of interest rates, we may well have seen the last interest rate rise, and it's quite possible most of the commentators expected we might actually have an interest rate cut towards the end of 2024. So the inflation rate, it's good news that the inflation rate has come down beyond expectations. Just looking at the bond rate, so this is a 10-year bond rate, and all these charts are 10-year charts. So, the 10-year bond rate was getting towards 5%. So with the inflation moderating, the 10-year bond rate has come back a little bit. That's good for people who hold diversified bond funds. If interest rates fall, that's a positive for bond funds because, when bond rates fall, it means bond prices rise. So, the 10-year bond rate is still at a pretty high level, much higher than it was, obviously, in 2020-21, but it's currently around 4%. Let's look at the Australian share market. These are 10-year charts. So the green line just shows you that we've had, over 10 years, we've had a positive trend, albeit some significant volatility, particularly with COVID in the first quarter of 2020. However, the share market hasn't actually really moved much since the high it reached in August 2021. I mean, we've just sort of crossed past that point now, but the share market, just in terms of price, has actually been pretty flat for more than 2 years. We have also, of course, had some dividend returns over that period of time. So just looking at the property market, I mean, again, this is a 10-year chart. The property market fell. This is listed property securities fell very significantly in early 2020. And so, I mean, it did recover a fair bit of ground, reaching its high point towards the end of 2021, but it's still way below that, even though just in the last few months it's had a pretty significant rise up through that time, but it's still well below the peak of that market. Just wanted to look at the international share market. So this market, that's a pretty strong trend up. This is not just the United States. It's sort of it's a Vanguard ETF which covers the international shares. It's also not hedged to Australian dollars, so there's also the weakness in the Australian dollar is contributing to this. But international shares has been on a pretty strong trend up over that 10-year period, albeit that there's obviously some corrections within there. Just wanted to have a look at a couple of commodity prices, or a couple of commodities. Gold. Gold has been very strong, not quite at its high point at the moment, but it did reach a high point in October 2023. It's been very strong as a hedge against inflation, really. It actually started rising even before COVID hit in early 2020. And the last commodity I wanted to just look at briefly was the oil price, which has been really volatile, over the past 5 years or so. It actually went negative, back in 2020, which is crazy. But that happened, simply because, the whole global economy shut down and they couldn't shut down production of oil. So they're basically paying people to store it. And then it rose, it's sort of at a reasonable point at the moment. We don't really want to see that oil price rising though, because that will, reignite inflation. It's a contributor to inflation. Just wanted to put a quote in. Some of you may have heard me use this before, but this is from Warren Buffett. In the stock market's a device for transferring money from the impatient to the patient. Just really want to reiterate that it's so important to stay focused on long-term investment strategies and not to get too caught up in short-term noise and things like that. So if you've got any questions on any material in here, you're always very welcome to give us a call or send us an email. Thank you very much.